All right, what's up, guys? This is the, I think, sixth video in the series Road to 100K Funded. And this is the trade I took today, obviously on replay. And I really like this example that we had today. We just had confluences stacked on top of each other. And I would recommend you watch the whole video because there is one super important thing I have to point out, right? We have one confluence that we didn't get, but I still took the trade, and I'll kind of explain why. So watch the whole video to figure out what that confluence is, right? It'll give you guys better insight on like discretion, and then you have like a better understanding of the markets. So yeah, I'll just say like, wait until the end, watch the whole thing. It's gonna be really short, so just finish the video, right? Anyways, here's what we did today, right? This is on the 5 minute time frame. We had previous day highs, previous day lows, right? It was kind of like we entered the market at 9:30, right? Every single day we enter the market at 9:30 New York time, right? New York Standard Time, right? We took out previous day highs, took out previous week low, right? My overall bias for the day was bearish because see this previous day high, we took that, and then it was looking like it was going to be a reversal, so that's why the bias was bearish for the day. And I saw this uh fair value gap right here, 5 minute fair value gap. It's kind of like 8:30 to 8:40, right? Saw this fair value gap and I was like, yo, I could have entered here. This would have been like a really good entry, right? Because our targets were London highs, right? We have this 4 hour bearish fair value gap. We had low resistance liquidity. We had PM lows and previous day low resting inside another 4 hour fair value gap. So we had so many like good targets here, and I was like, yo, like I just missed out on this, right? Because price is just gonna run out, right? It's just gonna run. But guess what happened? We created a fair value gap right here. And I was like, hey, I might have another opportunity, right? I have another opportunity, and guess what we get? We get another opportunity, right? On the 5 minute time frame, this is the highest time frame inversion, right? So it's like check the 5 minute, check the 4 minute, check the 3 minute, check the 2 minute, check the 1 minute, right? We have inversion on every single time frame, but the 5 minute is the one we choose because we see it on here, and since it happened, we're just gonna take that since it's the highest. So yeah, we had this, and then I entered in right here, and the risk is kind of high on this, but you know, you could have stop loss here, but I chose to have it here because I knew that like, okay, we went up here and then we came again. So I was like, all right, cool, we're gonna get that. And then I targeted London highs right here. You could have this as your target. That's like kind of low RR. So it's like, okay, London highs, right? And I was kind of expecting price to kind of go through all of this because, we have low resistance liquidity here. We have previous day low, PM lows that we still have to manipulate, and we have this 4 hour fair value gap. But I was like, hey, let me just like do this, right? Just like 1 to 1, right? Because I don't really know how far price is going to go. So I was like, all right, I'm fine with this. And then we got the trade, right? Boom, easily got that trade. And yeah, there is some like LR right here. We have some like lows resting here. We did take that, but then we ended up kind of reversing here. But yeah, the point is to not like you don't have to go for the full target, right? This is like a full target, but we don't have like 100% conviction that like okay, it's actually gonna hit the target, so we don't take it, right? We can just take like a better target right here, right? If I get my 1 to 1, I'm good, right? I don't need to go any further than that. If it's like super high conviction, if there's like way more confluences that I have, and I'm like, okay, this is a really, really good trade, then I'll take it all the way there. But for now, I'm like, hey, this is good, right? Because we have 4 for value up, and we have to respect that one. So this trade worked out pretty nicely, right? And I could have probably like held it a little longer because there is this like full 4 for value up, but in theory, I would have just taken full profit at London here. So yeah, that's what I did. I think what ended up happening is that we did trade down to this like 5 minute fair value gap. So that's cool. But yeah, that's what happened. And the one thing we got today that I just learned about was this turtle soup, right? So all turtle soup is like you see this little line here. So that means we have some sort of like swing high here, and then we take out that swing high. So everyone thinks this is resistance, and then we take that out, and then we start going down. That's what turtle soup is, pretty much. The one thing we didn't have in this trade was a fair value gap that confirmed this, right? So if we have like some sort of fair value gap, maybe it's like a bearish fair value gap, right? If we have some sort of fair value gap that, like, let's say this is like some higher time frame fair value gap, right? So HTF, FVG, right? Higher time frame fair value gap. If we had something here that was like higher time frame fair value gap, this is going to make the stop loss a lot stronger, right? Because the stop loss needs to have a reason to be there, right? And if there's a higher time frame bearish fair value gap here, that means, and we respected that, that would mean the stop loss is valid, right? That would mean this stop loss is valid. But we didn't have anything here. So that was why I was like a little bit more hesitant. But the trade still ended up working out pretty well because we had like all these like good targets right here. So yeah, it still ended up working out. But I would say that fair value gap concept is super important. So you need to have like some sort of protected stop loss, right? Basically some sort of PD array that protects your stop loss. And only if you have that, you should enter, right? If you don't have it, but then you have a lot of other confluences, which we did right here, right? Then you can enter. And then also another thing is the speed and the strength of this inversion, right? If you see this inversion for value gap here, we just had a one candle close through, right? It just, the inversion happened in one candle. It only took 5 minutes. It only took one 5 minute candle to close through this, right? Look at the close. It happened outside of the fair value gap, inversion fair value gap. So it just took one candle, which took 5 minutes, and there's not much of a wick, right? When you're looking for closes, you don't want to see a massive wick. If we saw a massive wick here, I wouldn't take that, right? We have like a pretty kind of average size wick here. So that's good, and that's why we took that thing. So we want to look for speed and we want to look for strength, right? We want to look for a massive candle, and then we want to look for a small wick, and then on top of that, it should happen really fast. So within like 1 to 3 candles is where we should get our inversion. If it takes more than 3 candles, then we should probably like start getting worried, right? Because we're like, yo, this is taking too long. It's probably not gonna happen. But this happened really fast. One candle, big one, small wick, and it has like a pretty decent close from the fair value gap. So that's why we took it. And we got a pretty good 1.08R, like a 1R trade. And then we did break even at this internal high. Just like close to, 0.5. So yeah, it's a good trade today. And we're probably going to see more bearish examples coming up since we just manipulated this. So we're going to probably see bearish examples. We have a bunch of LR here. So we're probably going to have good examples in the next like upcoming days. So yeah,